And gold had a great day yesterday, and in the midst of the Comey testimony on the Hill, it dipped and came back up. Here to discuss the reaction of the gold stuff, Peter Schiff, CEO of Euro Pacific Capital. Peter, what can account for yesterday's high and the way it fluctuated today?
Well, I think gold has been trending up now for some time, and so yesterday it hit a new high for the year. Didn't quite hit the 1,300 milestone, but it came pretty close. I think maybe 1,295. Gold stocks finally kind of woke up from their slumber. They've been ignoring the strength in gold, and yesterday they finally participated, or 2 days ago rather, I think was the rally. Yesterday there was a bit of a dip in the price of gold. Gold stocks pretty much held on to their gains, but this morning, just before Comey testified, there was a big seller that knocked gold down about 15 bucks, and so it pretty much had retraced all of the rally from what was it, on Tuesday. And but it did claw its way back, but not back into the black. It still, I think, closed the session down about $7 or $8 today. But you know, the price of gold is rising. The dollar, on the flip side, the dollar hit a new 6-month low again yesterday. It rose a bit today, both on the back of maybe some dovish comments coming from Mario Draghi in this morning's press conference, and then again based on the fact that there was no bombshell from Comey during this testimony.
You're right. He held it together pretty well. I think gold closed at, what, 1281 today, if I'm not mistaken. What do you think about the elections in the UK? Do you think it had any bearing on this? You know, many of our viewers are international. They've been watching this very, very closely. Comey may or may not be a big issue to them. What do you think about the gold trading on that?
Well, I don't think the gold, again, is trading much on the outcome of the UK election. I mean, Brexit is pretty much, you know, happening anyway, and I think it's obviously a bit better for the British if the Conservatives stay in charge of that process and run their country. But I don't know that there's a lot of people waiting on the outcome of the election as far as the gold market's concerned, or even the dollar. I think that more people are starting to look at the U.S. economy, the fact that the weakness that we saw in Q1 is not transitory, that it's bleeding over into Q2. People are starting to now backpedal their expectations for the second rate hike. More people are now looking for December rather than September. Of course, everybody thinks it's a foregone conclusion they're going to raise rates next week. But, you know, we'll see. I think more people are starting to come to grips with the fact that the Fed has been overly optimistic, and maybe even some of the comments now coming from Fed officials or former Fed officials. You had Coach Lakota out the other day saying the Fed should not be raising interest rates. In fact, he said that they should not be talking about shrinking their balance sheet. They should expand it some more, which means he's talking about QE4. Now, he may be an outlier, but I do think over time you're going to have more people at the Fed now that are going to be singing that same tune.
So you think that the possibility of raising interest rates next week is a foregone conclusion, or you disagree with that?
No. I mean, I think that the Fed is likely to do it because everybody expects it. And so far, when everybody expects a hike, they've delivered. But, you know, I don't think it's 100% lock. I mean, it's possible that they don't do it. But even if they do raise rates, they may dampen expectations for future hikes. We'll see. So far, they continue to talk about how great everything is and how everything is going according to plan, but it's obviously not. I mean, they keep talking that they're data dependent. The data is awful, yet they continue to ignore the awful data and act as if everything is going great. Well, at some point, they're going to lose what's left of their credibility if they don't at least now acknowledge what's going on. But they're afraid to acknowledge it, because the minute they do, I think a lot of people who have been pretending everything is fine may have to stop pretending.
What do you think about these retail numbers that are affecting the economy so much? Q1, we saw a massive drop in consumer spending. I've talked to plenty of people, guests on this show, who talk about consumer spending dropping, especially among millennials who are strapped with student loan debt, and the list goes on. What do you think about that playing out with regard to the rest of the year and the data that you say is bad that they're looking at? Do you think they're actually taking this into consideration with the consumer spending? They seem to keep saying it's transitory. It doesn't appear so.
I know, look, they're overlooking a lot of these problems. Retail is having a problem across the board, and a lot of people are whistling past this graveyard because they're looking at Amazon, you know, and the sales there, and they're saying, well, it's all just because consumers are shopping online. And no, it's not. I mean, sure, that is part of the problem for brick and mortar retailers, but it's not the entire problem. You said it yourself. The younger customer is broke. They either don't have a job at all or they have a low-paying job. They're still living with their parents, so they don't need to spend much money. And besides, they don't have a lot of money to spend because they have student loan debt. Many of them have auto debt. Maybe they borrowed money to buy a car when they were in college and they have to deal with those payments. And maybe they have credit card debt because they put what they didn't borrow from the government on their credit card while they were in college. So they're loaded up with debt. They don't have good paying jobs. And what's more important too, or maybe as important for the economy, is that I think a lot of retailers, pay rent to landlords, and I think there's going to be a big problem in commercial real estate because I think you're going to start to see a lot of vacancies. We're already seeing that in commercial real estate in the shopping centers and the malls. And then, you've got interest rates now rising, albeit slowly. But when you value commercial property, you take the income and you discount it with a cap rate, which is a function of interest rates. When your rents are falling because your tenants are going bankrupt and interest rates are rising, that's a recipe for disaster. And of course, the banks are on the hook. They have all these commercial loans out there.
Well, and you're right. The malls are turning into ghost towns and retailers are closing. That's 1 in 10 of Americans employed there. Thank you so much for weighing in on this. Peter Schiff, CEO of Euro Pacific Capital.